The work necessary to find the right acquirer. I'm Arthur Petropoulos, Managing Partner here at Hillview Partners. We're a middle market, lower middle market, M&A and capital advisory firm helping companies generating $1 million to $10 million in pre-tax profit to exit their businesses to secure capital. So in the process of selling a business, when someone says, let's take the business to market, there's this idea of hanging a shingle on the business. There's equally this idea, which historically has been the way that many of these processes have taken place, is that someone just sends an email to a mailing list of 10,000 people or postcards to 10,000 people saying, hey, we've got this company that does this thing for sale, would you like to buy it? From our experience, average efforts yield average or less than average results. And so from our perspective, finding the right acquirer is a proactive, not reactive process. It is a process of extraction, not a process of chumming the waters and waiting for fish to bite. And so in that process, anything that is proactive, anything that is targeted, requires targeting. And so the exercise of doing that is researching companies, whether through our internal databases, through external databases, through our team members that are focused solely on researching prospective acquirers all day, through thousands of conversations every month with different acquirers. A combination of tech and just old-fashioned discussion and research really yields an excellent audience to dig through when looking for those right acquirers. But having that audience, how do you target? From our experience, finding that right acquirer for a company requires 5 areas of focus. We'll leave one secret to the end of this. And so we'd say, generally speaking, we're always going to be looking for where there is a missing puzzle piece. And so looking at prospective acquirers, looking at companies that are strategics, private equity-backed portfolio companies, looking at potential strategic partners, private equity-backed portfolio companies, really looking at how they view the world, looking at how they are aggregating companies, how they are acquiring businesses, and where are their pieces missing in the puzzles that they're trying to build. We find it a much better exercise to go to somebody who has a particular view of the world and explain how our opportunity fits into their view of the world than saying, you know what, Mr. Billion-dollar company, you need to look at the world entirely differently. It's not going to happen, and so it's much better to fit what you have to offer in a way that the value proposition, the currency of the transaction, is palpable from their view of things. So digging into this, the 5 attributes that we're really going to highlight are in the context of communicating it to the prospective audience as a piece of their puzzle. So we'll dig into one to make more sense. So first is the range of the product, service, or offering. And the synthesis of this is truly capabilities. And so if you look at a company that provides services into a certain industry and it provides services A, B, C, but yours is service D, then the company that does roofing and siding may want a gutter company. You can think of a software company that does pricing and quoting would want to acquire a business that does sketching or prototyping for the same end clients. And so capabilities, or the product service offering range, is a main puzzle piece to look at. Second is look purely at geography. And so let's say we have that same gutter company. Perhaps it does gutters for the mid-Atlantic area, and so it's Pennsylvania, New Jersey, and Delaware. And there's a company doing the same thing in New England, Massachusetts, Connecticut, Rhode Island. It's understandable that it doesn't need to be a different capability if perhaps it just expands the geography. And so the missing puzzle piece for an aggregation strategy could be, how do we just build more geography? Because companies, as they're expanding, tend to always have this analysis of, should we build into the area? Should we just buy into it? And if you can give a compelling reason as to why it's more intelligent to buy, which it often is, then that can be the missing puzzle piece there. Next, let's say stratification. And so what we mean by this is really kind of tiers of a market. Let's again use a simple roofing analogy. If you have an asphalt roofing company that wants to get into higher end synthetic slate or actual slate roofs, that would be a tier. It hits a different market segment. So even if it's in the same geography, even if it's the same effective service or offering, if you are hitting a next tier, it could be valuable. And the same thing we've seen going downstream as well. And so we've worked with certain database companies that sell access or licenses to data, and they are looking to have a more middle market focused data product. That's a means by which they're seeking acquisitions as well. So number 4 ties these together to a degree, but we like to think of it separately in terms of the value proposition. So every company should have a value proposition. So if a company is already providing a service and they do it the best, well, perhaps they want an ancillary service that also does it the fastest. And so if a customer is looking at what they want to do and what they value most, it gives them more offers. Now, you don't want that to obviously dilute the quality of things, and that wouldn't be the case. But again, think of it kind of going hands in hands with stratification in terms of what is the client looking for, and is this a way of rounding out the offering. And so when you really think of business, think of a bouquet of flowers, and every offering whether it's to a different strata, vertically that way, if it's to a different geography, horizontal in that manner, you're adding in a new flower, a new capability, a new access point. If one is growing a business, and so a strategic that's making acquisitions, a private equity portfolio company that's bolting on different companies, you can think of them as building this bouquet of flowers. And every additional flower is incrementally more valuable to them. If you can paint the picture of your company as the missing rose for the bouquet, we like to use the puzzle piece, but whatever the analogy is, you understand the point. And so the fifth of these is a growth plan. And so looking at numbers 1 through 4, you're really looking at what's in place and what the company is currently doing. But when you say growth plan, we want to understand for our clients, what are the next steps? Even if you're exiting the business, what would those next steps be? And every company that's well put together and operated is going to have a plan for, if we were to own this business for the next 10 years, these are the things we'd like to do. And if we can align those with that of an acquiring company, then again, you hit a very good result. You hit a strong chord, and they say, we look at the universe largely the same way, and therefore this could be very appealing, and therefore we can put forth aggressive terms to doing this. Because at the end of the day, this all yields or all synthesizes down to stronger acquisition terms. Let's recap these 5 primary elements of the work necessary to find the right acquirer. So again, it is a proactive, structured, targeted outreach driven by lots and lots of research, but at the end of the day, you're painting the picture of a puzzle that your acquirer is putting together, and your company being the missing puzzle piece. That will ultimately yield the best outcome. And these 5 elements are understanding the product, service, and offering range. Number 2, understanding the client map from a geographical perspective. Number 3, understanding the client map from a stratification perspective. Number 4 is understanding the value proposition and if there's any complementary opportunities in that regard. And number 5 is there an alignment of the growth plans? Now, all of these things together is going to truly turn over rocks and extract prospective offers from the market, because you are communicating to them in their currency why this opportunity makes sense, as opposed to just dumping things on someone's desk and say, what do you think? Sending out newsletters and saying, please call us. Right? Hope is not a strategy in this business, and therefore things need to be done very proactively, very intentionally, and persistently. And to that final point of persistence, what is the secret to all of this? Well, it's do all of that research, do all of that work, focus on these 5 elements, and iterate that about 200 times. And so on any given opportunity, we're talking to at least 200 parties to really see where our client's going to optimally fit, where the opportunity is going to be best recognized, best valued, and ultimately create the best outcome from value, structure, transition, and employee perspective for our clients. And so that's the thought for today. Hope the week's going well. Keep pushing forward. God bless. We'll see everyone next time.